What if I told you that Bitcoin's value could surge by over 2,000% in the next 3 years? Sounds like a dream, doesn't it? Now imagine that this bold prediction comes from none other than Cathie Wood, the pioneering force behind ARK Invest. Wood has recently adjusted her price target for Bitcoin, catapulting it from $1 million to a staggering $1.5 million by 2027. This audacious forecast isn't plucked from thin air. Wood pinpoints 3 catalysts set to trigger this explosive growth. Firstly, the recent approval of Bitcoin exchange-traded funds, or ETFs, and secondly, the anticipated influx of institutional investment pouring into those ETFs. And last but not least, the upcoming halving event next month, which will effectively slash the rewards for mining Bitcoin in half. But before we get too excited, it's important to remember that not all predictions come to fruition. So, why is there such optimism around Bitcoin's future? Well, let's start with the simple fact that Bitcoin is increasingly being seen as a potential hedge against long-term inflation. Think gold or other precious metals, but in a digital format that's accessible to anyone with an internet connection. As fiat currencies around the world face depreciation, the allure of a decentralized, finite resource like Bitcoin only grows stronger. Now let's talk about Bitcoin ETFs. Until recently, to get a slice of the Bitcoin pie, you'd have to navigate through crypto exchanges or trusts, or dabble in ETFs tied to Bitcoin futures. Each of these came with its own set of challenges. But then came the approval of spot price Bitcoin ETFs by the Securities and Exchange Commission. This changes the game, folks. Spot price Bitcoin ETFs offer low fees and direct ties to Bitcoin's spot price. And perhaps the best part? They can be traded on the open market just like any other ETF. This is where Cathie Wood's optimism truly shines. She believes these ETFs will attract institutional investors, the big players who can really drive Bitcoin's price up. And there's more. Come April, Bitcoin is set for another halving event. For those not in the know, this means the rewards for mining Bitcoin are going to be halved. So, we're looking at a situation where demand could potentially exceed supply. And if your basic economics classes serve you right, that's a recipe for price hikes. Now couple this with ongoing inflation concerns and geopolitical tensions, and you've got a perfect storm brewing. Bitcoin's acceptance as a mainstream currency, once a distant dream, seems more possible than ever. With the upcoming halving event and the ongoing inflation concerns, Bitcoin's acceptance as a mainstream currency seems more possible than ever. So the bullish case for Bitcoin, it's stronger than you might think. Cathie Wood isn't the only one betting big on Bitcoin. In the crypto sphere, other players are also making optimistic forecasts. Standard Chartered, for instance, sees Bitcoin hitting the $100,000 mark by the end of 2024. Even more bullish, Fidelity anticipates prices reaching a staggering $100 million by 2035, and a mind-boggling $1 billion by 2038. These projections, while speculative, do spark conversations about the future of Bitcoin. The recent approval of spot Bitcoin ETFs could play a pivotal role in stabilizing its historically volatile price. This could make Bitcoin more appealing to risk-averse investors and further drive up its price. But let's not get too carried away. In the end, it's not about chasing a 2,000% gain, but about understanding the potential of Bitcoin as an asset. It's about assessing whether the bullish case for Bitcoin holds water and considering it as part of a diversified investment strategy. So, what's the best move for the prudent investor? Well, the answer lies not in chasing the hype, but in understanding the fundamentals. The bullish argument for Bitcoin is strong, with factors like institutional interest, regulatory approval of spot price ETFs, and the pending halving event all contributing to its potential growth. However, let's not forget the volatile nature of cryptocurrencies. The market swings can be both exhilarating and nerve-wracking. It's crucial to assess whether you're comfortable with these swings, and if they align with your investment goals and risk tolerance. If Bitcoin does seem promising to you, consider accumulating it over time or investing in low-fee spot price ETFs. These strategies could provide a more balanced exposure to this emerging asset class, mitigating some of the risks associated with direct investment. Remember, in the world of investing, knowledge is power, and the power to make informed decisions is the best investment one can make.